Hi, today is June 11, 2019, approximately 1:16 Eastern Standard Time. My name is Olawale Okabola of Spartacus Trading Corporation, where serious advanced traders come to train and learn. Bringing you part two of the video, fading this liquidity break of the market. I um, I talked about that one tick double distribution that has since been filled. Please excuse my software is needs to be. I need to reset my program. So we'll figure that out later. I want to monitor this trade that I'm currently in. I really want the market to get inside this overnight low, which is also they sold it. They being short-term daytime traders, I don't care who, sold it at this overnight low. If they don't get what they want, then they more than likely will be looking to cover their position. So that's what I'm looking at. Right now, the trade appears to be working. Although I now have a weak low against me. So I'm really going to have to pay attention and manage this trade to the best of my ability. So we're 3Y. Let's talk structure. We're 3Y, 33333. We feel this double distribution. Now we're 222, 333, 222, 333, 4. At 4, you probably, if we can get there, not saying we can get there, you probably, and even here it makes 4, right? You probably would then begin to get some balance. The market could form some kind of B formation off this double print poor low. Profile theory says that sometimes the market gets too short where they make these poor lows when the market is controlled by daytime or short-term traders. Okay? Well, who do you think is shorting? It's daytime frame and short-term traders, right? So we know what they're thinking. We know what they want to do. Um, so I'm going to monitor this trade. I use bar charts. I also use the profile to make trading decisions. It comes as no secret to me. This is a 5-minute bar chart. It comes as no secret to me. These short-term traders are they sold at this trend line. All trends are down. They sold there naturally. What they cannot afford to have is a cross. If they get a cross, we're probably going up. And I showed from the profile what's up above and what's really happening. So you know who's hammering this market. And this is a 5-minute chart. And 5-minute traders are probably more than likely relatively weak. They're looking for the quick pops, right? So now they're getting what they want. So now I know who's shorted from there. I'm not panicked. I talked about this weak low that was against me. And so now they're trading down to clear that up. That's fine. Clear it up. You cannot take out this poor low. You cannot fill this overnight gap. And we're probably still going higher. We're now 3Y. What I don't want is for us to get 4Y way down here. What makes this market dangerous that I just now paid attention to, value is overlapping on both sides. I don't like that. I don't like participating in markets with values overlapping on both sides. That doesn't give me any real good guidance of what's to happen. And then if we get 4Y down here, then this trade is underwater and I need to get out of this trade. So I'm watching to see if this weak low on the 15 minute can get taken out. If it gets taken out, then now I really want to see what happens, or do we continue to trade lower? As you can recall, I do have some options still that I would be more than willing to put on to get on board with this trade. And then if we get to be 4 then it's probably necessary for me to exit this trade. So initially, I missed my exit on this trade. I should have exited when I showed you I was expecting them to sell at. Just take those profits, step aside, and look to establish another position. Given the fact I had a weak low, but I'm running my yapper doing the video. I missed that opportunity, so I'm just gonna hang with it and see what happens. I'll bring you in when when I'm going to do something. I did not realize That's three times they bought off that reference. One, two, three. So it makes this sucker is really weak, man. So prudence over profit. Take a deep breath. I'm just going to have to let this trade go. Trying to get out. See if the market be merciful. I'm flat. I'm flat. I'm flat. I explain why. Three times they bought off this reference. This reference is a overnight low from a couple of days a couple of days ago. I think Thursday. That was never really revisited. I don't play around. Uh, this trade is overcrowded, going up. I'd rather wait for the market to go ahead and liquidate them, and then I will look to get back in. Let me cancel all my buy orders. You know what? Why cancel? I'll put it on. No, I'm not going to cancel my buy orders. I'm going to put them back on, and I'll be ready to take this trade at the overnight gap fill. At the overnight gap fill, clear up this poor low, which is fine, and take this trade at the overnight gap fill. If this trade works out and go the direction I thought it could go, well, I was shaken out of the trade. But reading the market was correct in fading this liquidation break. Now, I'm not saying we're going to get a total reversal all the way back up to the upside because we got some double distributions to contend with. These double distributions, this double distribution negates this weak reference. This double distribution negates this weak reference, and this is a really weak reference at the overnight half back. So, looks like I got out premature, but that's fine. I had to be prudent. I put prudence over profits. Yeah, three times. I put prudence over profits, so I'm not going to sweat it. I'm not going to sweat it. It's an okay day, decent day. I wanted more out of the day, but nevertheless, it's another winning day. So I'm just going to be prudent. Now, I am waiting for this gap fill. We might make a part three of this video. If there's a part three, then there's a part three of getting this trade and now managing it, looking for something to the upside. Okay, taking this trade at the gap fill, and also in and around this high volume, and then making it happen from there. And so I'll do that on a part three. I am talking too much. So if there is not a part three, at least you got a flavor of how we trade here at Spartacus Trading Corporation, how we look at the market, how we understand what our competitors are doing, how we understand what we're doing, how we're being uh, honest with ourselves. Like, for example, we know this is a weak low three. We're not going to wait around to see if it's going to work for us. We got some profits. We're going to take the profits. It's like 162 bucks worth of profits we took. We're going to take the profits and just retool and reboot. Look to get back in, probably at a better location. So these are all the things we train. These are all the things we learn. These are all the things we practice and drill to get better, especially once we understand market profile theory, structure, etc., etc., etc. Then it comes down to execution, and that's where most traders struggle is execution. So anyway, I hope this video helps. I wish I could have showed off a killer trade up in the $1,000 profit range. Didn't work out like that, but nevertheless, I showed you how to be prudent and not let greed get the best of you. This is Olawale Okabolo, Spartacus Trading Corporation. Once again, if there is a part three to this video, I will make it. Have a great day, folks.